Welcome back, YouTube. Welcome back, TikTok. I think I got a really great video coming up for y'all. I'm gonna be teaching y'all today how to day trade BTC USD and how I go about trading it day to day. Reasons why I like trading it is because it's a 24-hour market and there's a lot of volatility, and I think it's a relatively great pair to learn. And it's a great one to add to your inventory of things that you trade. I know a lot of people that trade commodities, futures, and crypto, and I'm gonna be teaching you how to trade this today. So let's get into it. Um, so things that I like to identify when coming on the charts here, I like to identify order flow and liquidity. So let's identify order flow. First, let's identify order flow, then we can identify liquidity. They're kind of like the same thing, but you use them in kind of two different ways. So order flow is basically what direction is the market going. So for example, this is going up, obviously, and then here it's going down. And here it's going down. So it's basically what direction the market is going. Now liquidity is where orders are being filled. It's what's making it go down. Let's put it that way. So orders were filled, sell orders were placed here. So when price reached this, it reached a pocket of sell orders is a way to think about it. So that's essentially kind of what liquidity is. And let me give y'all another example. Buy orders were here, sell orders were here. So that's a pretty easy way to identify that. All right, so we checked off box number 1. Strategy. All right, so let's say you identified liquidity and you identified which way the market is going. So let me try something. I guess we can try right here. So essentially, what we got going on here is market was moving down. It consolidated a little bit here. Oh, I tell you a great thing. I forgot one. Consolidation. Consolidation is kind of this right here. But this is a kind of a different type. Hold on. Let me see if I can explain consolidation a little bit better so I can kind of help y'all. Consolidation. It's basically the market is just moving flat, and it's really bad because you can't trade off of consolidation. But you can kind of trade off of this, and this is what I'm going to explain here in a second. So let's say you're watching right around, what would this been? This has probably been like kind of like midnight, or no, this is kind of like 5 a.m. But this will get the point across. So let's say you were trading London session, or you're trading during the night, because there's not really sessions during BTC USD because it's a 24-hour market. All right, so let's say you're watching this, you watch the market kind of go down, market's coming down here, and you're watching price action. You saw this candle wick pretty far down. Orders got filled there. Buy orders got filled there. Now, would you want to enter there? Probably not. And there's a reason. If you're trading based off of one wick, then like what are you doing? And a lot of people wouldn't have caught this. I would say maybe like decimal points. Maybe 1 to 2 people could have probably figured out that market was going to go up off of that. A lot of people ain't. So let's be a little bit more realistic. Let's say you're trying to find a confluence or a way to enter. So you kind of saw orders got filled here. Okay. So you're watching, it's making a nice trend upwards. So we're identifying a trend here. So market's going up and you want to catch longs here. All right, so let's kind of scale here. All right, so you're watching market starts making bullish order flow. So you're watching for a strategy. A strategy is this right here, and I'm explaining what those 3 candlesticks mean. All right, so we need a strategy. We need a way to enter so we can actually trade. So number 2, strategy. We're going to identify strategies here as breaker structure, fair value gap, SMTs, equilib, order block, and breaker block. And that is kind of a lot to take in. Essentially, what a breaker structure is basically the trend changing. It's basically this right here, what we just identified. Fair value gap is what we're about to talk about. Fair value gap is a sequence of candles typically identified in 3 candlesticks moving in a way. So let's see if I can kind of draw here. My drawing probably be pretty bad. It's pretty much a sequence of candles. Yeah, I'm gonna stop because I can't draw on here. But anyway, we already identified it's candlesticks like this, and you can identify them in different ways. See, okay, that's a bearish fair value gap, and here's a bullish fair value gap. These three candles right here, so you can actually see it. It's these three candles. Those three candles, fair value gap. I think we got the point across. All right, fair value gap. SMT, one of my favorites, and I've made a lot of money off of SMTs. They're actually one of my favorite. SMTs are basically from lows to highs and highs to lows. So this is a low to a high. And let's see if we can find a low. So this is trending upwards. So let's see if we can find, okay, a low to a high. And a low to a high. Kind of like that. SMTs, made a lot of money off of SMTs. All right, equilib, and I think this is what we're about to get into. So equilib. I think I found an equilib over here. Equilib. No, that's a cam box. Equilib. Equilib. All right, I'm gonna explain equilib here in a second. Okay, equilibrium. Order block and breaker blocks. I probably should have done it backwards. A breaker block is basically a failed order block. That's how a lot of people kind of change it. It's basically the move before it. Let's see if we can kind of explain it. And I think I found an order block and a breaker block kind of all in one. And let's see if I can explain this, because this is going to be slightly challenging. Okay. So a breaker block is basically a failed move upwards and a failed move downwards. They work in both different ways. So breaker block is this. Market tried to move forward, but it didn't catch momentum. See, market tried to push market upwards, and it kind of did, but it didn't have the momentum like this. It didn't have that type of momentum. So that's a breaker block. Now, an order block is kind of, it does catch momentum, but it's basically the move before it moves. So this is a failed, and then this, no, that's a trend change. This would be considered like an order block, because it actually caught momentum and it actually moved. So that's kind of that explained there. I hopefully got that. Now let's go into equilibrium, because equilibrium, and I'm gonna try to do equilib and try to see if we can get oh, I forgot to put time frames up here. All right, well, we're gonna teach that here in a second. Time frames. All right, time frames are very important. They're how you identify order flow. All right, so time frames. I use 4 hour, 1 hour, 15 minute, and 5 minute. I use 1 hour, 4 hour, and 15 minute. 4 hour, 1 hour, and 15 minute. All right, so we got that. So you're gonna mark out your session highs and session lows. I know that was a lot of scrolling, but we found it eventually. 1 hour. So these are 1 hour highs, and this is a 1 hour low. All right, 1 hour high, 1 hour low. And then we're gonna scale down even more. We're gonna go down to 15 minute, and we're gonna scroll some more. All right, 15 minute. All right, this is what we're gonna watch our trades on, since we got it now. All right, so 1 hour, 4 hour high, 1 hour high, 1 hour low, 4 hour low. All right, now we're gonna use 15 minute. We're gonna use our little thing over here. All right, so we're gonna start this from the top. We're gonna identify order flow. All right, the trend is moving downwards. Order flow is also moving downwards. We're moving down. All right, we identified that. Time to identify liquidity. The market needs to fill orders so it can move. So we've filled sell orders here, sell orders here, sell orders here, and sell orders here. 4 things of sell orders. All right. So market moved, market sold orders. All right. So we identified number 1. We need to find a way how to enter so we can capitalize on this moving downwards. And I already found it. Identified a breaker structure and a fair value gap. All right. The breaker structure was here and the fair value gap was here. Now where we entered could be equilibrium. We're about to find that out. Equilibrium. Draw from here to here. And it was. I identified 3 of them. And I identified breaker structure, fair value gap, and equilibrium. All right, so let's say you're watching price action. It's around 12 a.m. when this took place. All right, so you're watching price action. We make a high. We make a lower high. So identifying another one. All right, so now we're watching the highs and lows. All right, you see the market move upwards, quickly moves down. Okay, you see the market move up, and you see it make a fair value gap right here. It's a small one, but it is a fair value gap. All right, so now we're moving downwards. Fair value gap right here as well. All right, now you're telling yourself, okay, if it hits this point, you're drawing out your gam box, equilibrium. Essentially, equilibrium, you're buying at a discount in a way. Because like I said, you want to buy low and sell high. A lot of people might draw it like this so they can, maybe if they're like swing trading, but we're day trading, so we're going to catch a smaller movement. All right, so see it moves down. It comes and touches your midpoint, and now we're going to use risk management. This is where risk management comes into play. Most people would have probably set their stop loss above there and probably targeted like a 1 to 4. And I can drag this out this way, and looky there. Your trade would have hit. That is risk management. You could have done a 1 to 3 as well. Let's see, a 1 to 3 would probably been pretty good as a beginner. 1 to 3, pretty good. You could have maybe took a 1 to 5. No, you couldn't have took a 1 to 5 on this one. But what you could have done is tightening what you lose. So now you probably could have took a 1 to 5. 1 to 5. You could have definitely took a 1 to 5 on this. A 1 to 3, a 1 to 5, a 1 to 4, a 1 to 3 on this. Essentially, you're just decreasing the amount that you risk. And it is very important. You do not want to set stuff like this and stuff like this. No, that's not what we do here. And the reason why you don't want to do that is because you want to have even trades. And what I mean by that is you're setting good trades. You don't want insane ones that I'm going to be honest with you. You probably don't want to take anything over 1 to 5. The chances of you hitting that is probably irreasonable if you're just starting to trade BTC USD. The max you'd be taking is 1 to 5. And I stand on that. You can go back and watch my other videos and see me taking 1 to 5 maximum. Unless I'm in a trade. You could have had a trailing stop loss. And essentially what that means is let's say your candles move swiftly through. You could have maybe broke even, drug your stop loss to here, and keep trailing it. That's the only way I'll do anything over 1 to 5, and that rarely ever happens. All right. So I think we covered risk management pretty well. Please, it's very important. Red folder news. There is news that comes in the markets. We have like CPI news data, major crypto news. And what I mean by that is right here. There's always thing on TradingView, and it always shows you the up-to-date news that's going on. You can also use Forex Factory, so you can also check out your news, because they both go hand in hand. Now, psychology is probably one of the most important, but I had to put it last because I need people to click. So, psychology, you just need to be in the correct mental space. If you're sick, if you're just having a bad day, you're frustrated, please do not trade that day. Please save it for another day. Save your capital. Please, I've been there. I've been day trading BTC USD for nearly 2 years now. I think I've had great skin in the game. I know what order flow looks like. Identifying order flow liquidity is really good when it comes to trading. You just pick up on it faster and faster and faster. So I think I covered it quite well in this video. I hope you've learned a lot, and I'm going to keep providing value as much as possible, because this you can make genuine money from, and I think it's a great niche to get into. I'm taking a lot of risk by not going to college and pursuing day trading here, because the I value my time a lot. I just don't want to throw it away at a stupid piece of paper that says that you showed up to class on time and you completed assignments. Not my drift, and not my cup of tea or my cup of coffee. So, yeah. I'm going to keep doing this. I'm going to keep providing as much value as possible, because I know this will help a lot of people in the long run. And if you pick up on this skill, the amount that you can make is uncapped. So I think I explained it quite well in this video. Also, obviously, give me some feedback in the comments. And I think I'm going to leave off on this note. Don't let anyone tell you what you can and cannot do in this life. Anything that you put your mind to is you will execute on that. You will become big in that industry. Please do not fail just because someone said that it's corny, or people just make stupid comments on stuff like that. It's retarded. So, and you need to execute on this like a machine. You need to be absorb the knowledge and execute on it, because it'll pay off in the long run. So I'm gonna end off on that. I appreciate everyone that came here and decides to watch this video, because I feel like I've explained it quite well. Thank you all. I really do appreciate it. Please drop a like and subscribe, because it does help out this channel a lot, and I want to be able to show this my not my strategy, but the value that I provide when it comes to in a specific niche. So thank you, and I'm gonna leave off on this. This is Odyssey Caleb, and I appreciate you coming and watching this video. Thank you, everyone.